Well, it's Tuesday, the 22nd of November. Hello, everyone, and welcome to the show. This day, the Nigerian market started off the week around 0.5% to the upside, thanks to gains made by Nigerian breweries, the largest brewer, roughly 10%. You got Boa Foods PLC, also up roughly 4.5%. Those gains, both in the consumer goods space, lifted the market for the trading day. You had a couple of gains, however, in the banking space as well. Insurance fell on Monday. If you look at the BRVM, just tracking Nigeria's market as well, 0.42%. The market in Ghana also got a few notches of gain, just around 0.1%. If you look at the Egyptian markets, the second trading day of the week, market starts on Sunday in Cairo. That was in the water by 0.59%. The Nairobi stock market started the week 0.1% on the back foot in 128.99. The South African stock market, the GSE, fell by 0.88%, slightly below the 72,000 level as well. That just summarizes the first start of the trading week for you. But let's get into the bigger news as we begin to track the various regions. As always, we start with East Africa, where Goldman Sachs saying that the global bear markets for equities will remain until the end of next year. That's the forecast, according to Goldman Sachs analysts strategists who rolled out that investors note just to start the week. Keep that in mind. The bear market will likely stick around us until the end of next year with inflation and interest rate hike in everyone's crosshairs. On the continent, broadly speaking, Uganda says it's overshot its October spending by about 68 billion shillings, while Kenya's Cooperative Bank, one of the largest and iconic brand in the Kenyan market, reported about $140 million revenue for the month of September. Diaspora remittances came in Kenya by 4.6% in the month of October, while Kenya is looking at the first dispatch of Ethiopia power imports. That is coming from Ethiopia Electric into the Kenyan market. Let's take that straight to the West End and the Nigerian market, West Coast, where the Nigeria's debt office yesterday opened the 100 billion naira sukuk bond, a 10-year paper at a yield of 15.8%. It's the final sukuk bond raising for the year, by the way. Fix your public finances, the World Bank told Nigeria in a new report which was released yesterday. The World Bank Country Director for Nigeria, Shubham Shetty, told the audience in Abuja yesterday that Nigeria needs to spend more, but needs to spend better on infrastructure, plug the loopholes in your finances, and make sure that the trust deficit between the government and the people are fixed before you move on to further revenue mobilization. That was part of the whole engagement on Monday. In the meantime, the IMF is warning that Nigeria faces a food crisis next year on the back of the country's fiscal deficit level, as well as the current flooding that affected at least 25 states across the federation. Nigeria is made up of 36 states, including the federal capital, so 25 states, largely agrarian, had thousands and thousands of farmland wash away, and estimated 600 people died in the flooding that occurred in October. Now, the NGX and the Nigerian Exchange and International Finance Corporation, with the private sector lending arm of the World Bank, will be hosting a one-day workshop tomorrow with speakers from Morocco, from the World Bank, from Moody's Investor Services, all converging in Lagos and virtually to speak to green and sustainable bond market for Nigeria and using the NGX platform as that particular window for sustainable bond financing. The IFC will showcase its program of green bond offering within Africa and for Nigeria, with speakers coming in to discuss the private sector arm, what investors want and what the market should be doing. All of that will come together tomorrow here at that particular conference. In the meantime, Ghana is looking at a debt stock of about 450 billion cedis for the full year 2022. That was according to the finance minister, Ken Ofori-Atta. In the meantime, reporting third quarter earnings. Bank of Africa in Niger, but is listed on the BRVM in Cote d'Ivoire, reported net income down 14.34% for the third quarter ended September, while Senegal said it was able to raise about 35.6 billion CFA franc on the West African Monetary Union region. That's in West Africa. Take that on, bring on board the Southern Africa. Of course, ESCOM rolling outages is still everyone's major concern. But some good news, by the way, because the S&P Global Ratings, the world's number one rating agency, affirmed the country's credit rating and maintained its positive outlook on South Africa, the continent's most advanced economy. And U.S. asset manager Rohant Group says it's bought Ethos private equity in South Africa. That's part of the market's news. PPC, the cement company in South Africa, says he's holding back on dividend because there's a pressure on profit on the back of that massive energy deficiency that South Africa currently faces. And time is here. Time Bank of Zimbabwe is back after 18 years of being closed down. Time Bank is back on time on the streets. Its shops are reopened for business. Congratulations, Time Bank, for making what you called a resurrection. So, Barloworld in South Africa says it's going to spin off Avis rental in South Africa and put that as a separate listing on the JSE. We keep an eye out on that. Let's finish off in North Africa, by the way, and check the big stories as we start the second trading day of the week. Egypt's agri exports beat about 5.0 million metric tons since January, according to the minister in charge. In the meantime, the trade minister and the Chinese ambassador to Egypt are holding talks on boosting economic cooperation between China and North Africa's biggest economy. The Amir Power is developing 1,000 megawatts green hydrogen for Egypt, while Morocco's CDJ reinsurance unit is looking at ASR to expand its operations across the region, that is North Africa, around to the Sahel. That is your briefing for Telpinbell this Tuesday, the 22nd of November. I am Boosting Number 5. Have a great day, everyone, and I'll see you next time.